So transfer pricing and multinational management control system. So basically what we are doing here, we are discussing two different aspects. One is that how the internal one division or one unit of the business is transferring the output to the other as an input, and what price they're going to charge, because we are treating these independent units and we want to know the performance of these independent units or the departments or the divisions of the business. So how they transfer the prices. And a very good example is discussed in your book. Like there is a oil well. They are extracting oil. They are sending it to the refinery. So at what price they're going to send per barrel of their oil, crude oil, towards the refinery, and the refinery is processing it and selling it as a product, final product of a gasoline or a diesel or all these products. So this is how we transfer the cost. And the other one is a management control system, MCS. Uh, let's start. Integrate the accounting internal control system, uh, assurance framework with the existing legislation. Apply transfer pricing process, assess the market-based transfer price method, apply relevant cost and tax consideration to evaluate the selection of cost-based and negotiated transfer pricing, and analyze the income tax consideration in a multinational transfer pricing. So let's discuss the management control system are a means of gathering and using information to aid and coordinate the planning and the control decisions throughout an organization and to guide the behavior of its managers and other employees. So it's a control system, it's an information system, it's a computer system, it's all integrated system. The objective of that system uh, is to gather information and in order to help the management in order to coordinate their activities as well as to control those activities. And it also include like a computer system, softwares, the security system, and all these systems are when they are integrated, develop information for the decision makers. So many management control system contains some or all of the balance score perspectives. So we can add up the balance score like the product and the consumer performance and the employees performance and all these things, consumer satisfaction and employees performance. So these are all the things we can add up into that management control system. Well-designed MCS use information from both within the company, net income and employee satisfaction, and outside the company, stock price and the customer satisfaction. Consists of a formal. So this MCS or management control system has two aspects. One is a formal one, and the other one is informal. So formal one includes explicit rules, procedures, policies, performance measures, and incentive plans that guide the behavior of its managers and plus. So everything is in black and white, so everyone can know that what is the decision in that situation. So that's what we call it as or the manuals and all these things. That's a formal system. Informal system is also there. That's we call it as a part of a management control system. Include shared values, loyalties, and mutual commitments among members of the company, corporate culture, and unwritten norms about acceptable behavior. So normally, the big corporations have their own culture, their own uh, different things, environment and slogans, and they treat them as a whole family. That's the way they give the sense of a association of the employees towards the corporation. So this is an informal way. Even at some point, every organization or every corporation has its own we call them as a trademark of or slogan for their motivation of their employees, or they have a corporate color, culture, and all these things. If you go in deep on these things, uh, evaluating management control system To be effective, management control system should be closely aligned to the firm's strategies and goals. So definitely, the management control system should be designed in a way that what is the objective of the organization to achieve. System should be designed to fit the company structure and decision-making responsibility of individual managers. And we know that the systems can be from different types, like it's centralized, is so effective management control system should also motivate managers and their employees. And motivation is the desire to attain a selected goal or a goal congruence combined with the result pursuit of the legal that goal effort. Two aspects of motivation, goal congruence exist when individuals and when we align. This is basically an alignment of the personal goals and the corporation goals together in a way that, okay, if you grow, if the organization grow, you will grow and you become a senior and senior, and your financial benefits are also growing. So that's the way that it's going to be make it as a goal congruence. Group work together towards achieving the organizational goal. Managers work in their own best interest, take actions that align with the overall goal of a top management. And that's why in good organizations or in good corporations, they hire the people for a long term. And why? Because in the long term, it is possible that you can develop this goal congruence because you give the idea, the employee, that if the corporation grows, you will grow, and if the corporation is not growing, it means that you are not growing. So that's the way that it gives. But if you hire the people for a very short period of time, no one is developing this intimacy that that you have a part of this organization. So effort is exertions toward reaching a goal and include both physical and mental actions. Organization structure and decentralization. So decentralization, there are two ways of structuring an organization. One is centralization, that everyone should report the things to the center, and the center is making decisions. That's what we call it as a centralization. Decentralization is that at lower level, the people are making decisions based on the current situation. So decentralization is the freedom for managers at a lower level of the organization to make decisions. Autonomy is the degree of freedom to make decisions. So the greater the freedom, the greater the autonomy is. Total decentralization means minimum constraints and maximum freedom for managers at the lowest level of an organization to make decisions. And total centralization, on the other hand, is means that the maximum constraints and minimum freedom for managers at the lowest level of an organization to make decisions. So company structures generally fall somewhere in between these two extremes, as each has the benefits and the costs. Now, what is the benefit of a decentralization? Create great responsiveness to the subunit customers, suppliers, and employees, lead to gain from faster decision making, and increase motivation of a subunit managers, assist management development and learning, sharpen the focus of a subunit manager. So these are the benefits that we can uh, get if we structure the organization as a decentralized, that make the decisions at the lower level. On the other hand, what are the costs or the drawbacks or the disadvantages of a decentralization? Lead to suboptimal decision making, because every unit is independently thinking. They are not thinking as a collective in a broader picture, in a way holistically for the organization. They are just focusing on their own division, own department, own unit. So which arises when a decision benefit to one subunit is more than offset by the cost or a loss of a benefit to the organization as a whole. So also called incongruent decision making or a dysfunctional decision making. So focuses managers' attention on the subunit rather than the company as a whole, results in a duplication of output if subunit provides similar products or services. Decentralization in multinational companies. Multinational firms are often decentralized because centralized control of a company with subunits around the world is often physically and practically impossible because of the time differences, because of the cultural differences, because of the rules and regulation differences in different countries, in different locations. So it's very hard. So mostly the MNCs or multinational corporations are operating with decentralized manner. Decentralization enable managers in different countries to make decisions that exploit their knowledge of local business and a political condition and to deal with uncertainties in their individual environment. Biggest drawback is the loss of or a lack of control. The decision about responsibility centers, regardless of the degree of decentralization, MCS use one or a mix of the four types of responsibility centers. So cost centers, revenue centers, profit centers, and investment centers. Profit centers can be highly centralized. Managers have a little leeway in making decisions. However, the cost centers can be highly decentralized. Managers may have a great latitude on capital expenditure and where to purchase material or services. So this is the way that we divide the whole organization into different centers like a cost center, revenue center, profit center, and investment center. In a profit centers, the decision making or the organization is working as a centralized, and in a cost center, the organizations are working mostly as a decentralized. So this is the first part of this chapter